All right, so welcome to another video. Today we're going to take a look at the Amazon stock split, what you could do, what you should do. Maybe there's something different, but we'll go in, take a look at it, and give you some insight here. All right, keep in mind, none of these are recommendations to buy, sell, or trade any stocks, just my own personal opinion. And if you want to grab my opinion, definitely do so by checking out our Discord channel and our Traders Fly website. Both of those links are in the description right below. On Traders Fly, you can check out some of the latest classes that we've got. On Discord, you can see some of the chat things that we would go ahead and talk about, from charts to option strategies, stock movers, and just some general chats as well. So that's basically like a chat room, but announcements as well in there. Okay, so if you're really looking into Amazon stock split, and we're looking at Amazon stock split here, and we're checking it out. They did have an announcement here. It's a 20-for-1 stock split. So basically you get 19 shares for every one share that you have. That'll push the stock usually higher because now more people will be able to get in. Oftentimes for option traders, this can be a good thing and it can be a bad thing. The bad thing is sometimes if the stock price is too low, there's not enough premium then in the options. But later on, it can pan out to be okay because more people can get into the stock. So as it splits out, depending on where it lands, you know, that price will go a lot lower, make it more affordable, and now the premium won't be jacked up. Unfortunately, there's probably going to be less strikes and those kinds of things that you'll be able to trade. So that's going to be a little bit of a downside to some degree, but it should make it less crazy and less of a beast. So anyway, now that we take a look at here, Amazon here, you can see kind of we're holding the support level right here at this level. So what is it that you might do in something like this, or this type of strategy, or this type of insight? So I don't think it'd be any different when you're looking from a stock split perspective. If we're looking at Amazon, so on the option side, what's going to happen is the same thing. They're going to split your options if you're holding the options. So it doesn't matter if you run through them. It's just going to sometimes be a little weird for a couple of months until all the numbers get digested and so on. Okay, so let's say we're going out about 50 to 71 days here. Just to give you a little thought for take right here, I might go ahead and do something as simple as selling vertical spreads right now, because right now you can see it's holding this price point right here, about 2905, 2900 is kind of being held. We tested around 2800. So if I'm buying the dip, and normally prices go up after a stock split. So if I'm going in and doing something like that, I could go, 70 days or even 50 days right here, and go to maybe about a 20 delta or so. Let's go to 2700. Nice round numbers. It should pan out fairly well. I could do a 20-point difference. And you can see right now the premium collected is very pricey. And it's very nice and juicy. I got about $4.80 coming in right here with a lot of range. Unfortunately, it's pretty expensive for the average person. And that's where the stock split could help out. So as we take a look at something like this and start putting it on, you could just do one contract now, and if it runs through on the split, depending on when they do the vote and everything, then it should work out fairly well. So anyway, but from a regular strategy perspective, doing a vertical right now seems to be a nice approach because, it's getting all the way over here. If the stock is still too big for you, how do I play this? How do I do something different? Okay, so here's another way to buy the dip kind of on Amazon and look for it further out. I'm going to go, let's go 500 strikes. Here I've got, a $3,000 beast. We're already almost at 3,000. If I do 350, I could do something all the way over there. 71 days. I don't know if that's almost getting too far away. So let's go to about a 340 right here. And what I'm going to do is I'm going to go ahead and do a butterfly. So a long exposure on it with a butterfly right here. And what I'm going to do is spread this out a little more. Okay, so that gives me some upside. And I'm going to see here how that's going to pan out and look. And I don't know if it's going to line up very nicely. I don't think it has 3070. Yeah, 3070 is not traded. So that's about as best as I can kind of get. So it's kind of like a vertical, but it's a cheaper alternative. So rather than doing the $1,000 vertical over here, selling premium, and kind of getting a 1 delta, 1.3. This one is getting less delta, 0.87 delta, but I'm only risking 460. So this is typically the way a lot of people that I work with that don't have a ton of capital or don't want to put a lot of money into Amazon will trade it right now. And that's what, a lot of people will do with smaller account sizes is they'll kind of create kind of like a butterfly vertical conversion, something like this, which is very similar in nature. If you want to go further out in time, normally, going out further out, you are able to create and construct a nicer, kind of better butterfly. So let's say we go to about a 3,300 by a butterfly. Unfortunately, the butterfly only matures more closer to the end of expiration or closer to the end of expiration. But what this does is give you a bigger range. So even here with a 100-point difference, let's see if we could go to 150-point difference. Nah, doesn't even work. 200-point difference here and 200-point difference on both ends. With a 200-point difference, this now starts to actually become looking like a normal butterfly here, but I have to spread out and use about $2,800 of capital to make that work. So it still gets a bit expensive and pricey. So anyways, this is a couple of different ways to kind of trade Amazon right now at a cheaper way. If you're looking for a bullish bet for the stock split, is kind of taking a butterfly approach right here where you're getting some upside move rather than just, buying straight out call. It'll cost you about $2,800 or so on the butterfly. You could also do something like this vertical that's with another leg on the other side, which is still a butterfly. It's just unbalanced or broken wing. And then it cuts the capital. So now you're risking 473. And of course, the third way is probably just doing a vertical right here. But it's a little more pricey, capital intensive at 1,490. You could do a diagonal and that kind of thing. You could also do a vertical, maybe right at the money, something right here. And doing a strategy like this, but the spread, it's fine, but you will be using a little bit more capital than if you add another leg kind of on top of it. So I could do something like that, but I could go, let's say buy this one, sell this one. And then what I could do is actually sell this one and buy this one. So it's kind of like a bullish iron condor in a weird way. Okay. And I could do something like that and spread this strike 5 points. Nope, won't let me. Let's go 10 points like that. And that'll use, a little bit less capital there to some level, or have some protection on this other end if you like kind of collecting premium from that other side. Yes, of course, the vertical itself right at the money is a bit cheaper because it's 548. But if you're trying to sell premium against it, you could do something like this, where if it pulls back, you could take that premium, maybe sell also a shorter dated premium against it. So capital wise, it's not too much different, but there's a couple of different ways that you could kind of trade and play this stock in the options world when it comes to Amazon with the stock split. And if you're thinking it's going to go bullish, and if you're thinking it's going to hold this price level here around 2,900, this might be a few ideas for you. Anyway, thank you so much for joining me. Hope you enjoyed this video. Feel free to check out my critical charts channel, where I talk a little bit more about stock charts specific. Check out the classes and courses that we have available, because we have some more coming up that are really nice, and get some freebies. Discord channel as well if you like to grab some announcements. Anyways, thanks for joining me. I will see you in the next episode.